Okay, so what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, we've got another important topic to discuss: how to create your own trading strategy, because without a strategy, you're not going to last in the markets. So in today's video, I'm going to break it down to 5 easy steps. We'll go from picking a trading strategy, learning it, back testing it, forward testing, how to refine a trading strategy, all the way to having a strategy tuned to your strengths, protects against your weaknesses, and you can look to go and attain larger capital. So if that's going to interest you, something you're interested about, please be sure to stay to the end of the video. If you haven't done already, please be sure to drop a like and subscribe to the channel. It really does help out. And hit the bell if you haven't done it already to don't miss out on any streams or uploads in the future. But without further ado, guys, let's get into the video. Okay, guys, so step 1, deciding on your edge or your pattern, something that you'll be learning and developing into a trading strategy and building upon in the future. Now, this isn't so important because there's so many different strategies out there, and I'm a firm believer that every strategy can be traded profitably if done correctly. So deciding on what strategy you're going to trade with is not so important. It's more how you trade, which we'll get into in future steps. So it's not so important, but you do want to pick a strategy or a pattern, something that's versatile that we can use across different time frames, depending on what session you're going to trade, where you are in the world, depending if you're in full-time employment or you're part-time, or if you want to go into full-time trading or just do trading inside, something that's a bit versatile and can be trading different markets as well, not just FX, crypto, indices. You want to be, versatile and able to adapt if things change. So that's a key factor you want to be looking out for in the strategy. But again, as to which strategy it is not too particularly, important, as long as you can understand it from a basic point of view. Obviously not fully in full depth right now, you're still a beginner, but as long as you can understand it in a basic context is the important thing when deciding what edge or what pattern you're going to build upon and create your own strategy. And now you can move on to step 2, which is all about learning and understanding the strategy, the edge, the pattern in great detail. This is where you're going through tons of content, making notes, learning new concepts, how to apply it this way, how to apply it this way, to what to look out for, different market conditions, managing trades, entries, stop loss, taking profit, where to target, all the kind of technical, information about strategy, everything you need to know before you start applying it to the real life market. This is where you do all that kind of learning. This is where a lot of hard work is done. And then all the knowledge you've learned, you can then apply it and experiment in the real life markets, whether through back testing or demo testing, or preferably actually doing both, because demo testing, you get real life exposure to the markets, obviously without capital. So there's no kind of emotional attachment, but at least you can assess the strategy in a bit more of a systematic way. And obviously back testing, you can go through heaps of past data and really collect data on your strategy to see if it's something that is worthwhile. So this is step 2, which is just about learning the strategy in detail, and then applying what you learned into the real life markets and collecting data. Now we can move on to step number 3. Okay, so step number 3, so far you discovered the pattern, the edge that you're looking to learn, and you've learned a lot about it, applied it to real life markets, collected data. Now step number 3 is all about do or die. And what I mean by that is either you're looking to keep doing what you're doing and keep progressing down that road, or look to pivot in a different direction. And this is because you could come into a situation where you've back tested 500 trades at least, and you haven't got the results you're looking for, aka it's not profitable. If you're in this situation here, there's either 2 things you can do. You could look to go back to the drawing board, relearn the things you've learned previously in step number 2, go over concepts again, maybe there's some gaps in your knowledge that you kind of haven't figured out yet, or you can pivot to a different strategy. And my opinion would be looking to pivot to a different strategy, because understanding a strategy shouldn't be too hard. Yes, it might be time consuming and there's a lot of effort to it, but at the end of the day, we're not here to do rocket science. We're not here to solve a crazy algorithm. We're just here to implement something systematic into the market, something we can understand, we can refine, tailor to our wants and needs, but it shouldn't be too complicated. So if you haven't understood it by now, and you've done a lot of effort, so obviously be true to yourself. If you've been half-hearted with your studying, then obviously back to the drawing board for you. But if you have put a lot of time and effort into it, a lot of hours and hours studying and understanding the concepts, and it still isn't quite clicking, then it might be better to pivot to a different strategy. Again, your goal here is profitability, to attain money, not be the most profitable trader. That could be something you aspire to in the future. Again, if you're still 6 months, a year, 2 years, 3 years into your journey, there's people out there with decade, 2 decades in the market. Why are you trying to be the most profitable when you haven't even done the most effort into the markets yet? At least collect some experience, but your goal now should just be profitability. So if the strategy is not doing it's not giving the results you're after, it's probably best to pivot to a different strategy. Go back to research. Back to the first and second step, looking for other professional traders, what they do, understanding their concepts, and then look to experiment with that into the real life markets and gather some more data. And if you come up to a profitable outcome, then you can progress into the next step, number 4, which is all about refinement. But this step is do or die. This is the pivot where you really knuckle down. If it is profitable, this is where you're going to push the strategy, all you can, and put all your emphasis to create this into your own strategy and trade profitably from. If it's not that outcome and it's unprofitable, then it's probably best to go and look elsewhere. Or if you haven't done your due diligence properly, might be best to go back to the drawing board and repeat phase 2 and relearn that strategy. But if it is profitable, we can move on to step 4, which is all about refinement, which again, there's a lot of work to do in this section. Okay, so step 4, this is all about refinement. This is how you're going to tailor the strategy to yourself and also tailor yourself to the strategy. Like I said previously, all strategies are profitable, but it's how you trade that actually makes you profitable. So, 2 traders can be trading the exact same strategy, but take different trades, and one could be profitable, the second one might not be profitable. Again, they're trading the same strategy, so it tells you that's really to do with the trader and not really the strategy itself. So this is why refinement is so important, because in refinement, we're going to actually be looking through the data, the back-tested data you've done in the previous steps, and now analyzing that data itself, looking for your strengths, your weaknesses, what's working well, what's not working so well, what days particularly perform better or perform worse for you, what sessions perform better, what particular entry pattern is working well, what particular risk rewards working well. Is it best aiming for 5 to 6 to 1, or is it better looking for 2 to 3? Looking for stop loss placement, confluence with higher time frames, maybe a certain confluence to incorporate your trading. All of this needs to be understood in great detail to understand the optimal conditions for your trading setup. Now, the goal of this is just to create that one particular setup, 1 or 2 particular setups that perform very, very well, and understand the conditions you need for that setup to perform very, very well. And now this will be your trading strategy, that particular setup, not looking at all the setups that fits the criteria, but that particular setup, maybe a particular session, maybe a particular pair, or maybe a particular few pairs, or a particular entry pattern, particular risk to reward, particular confluence, what performs well. And you can obviously use your data to understand this, but what performs well. Now, this particular setup will be the strategy you use to implement in the real life markets with real life capital. Now, once you understood this well, then you can go on to step 5, which is all about live testing with real capital. Okay, so last but not least, step 5, which is all about live testing. So by now you've discovered your trading pattern, your trading edge, you developed it, you learned about it, you've back tested it, you applied to the real life markets, you're profitable from the back testing or the demo testing data, you refined it, you know what particular pattern or particular conditions you're going to focus on, and now that particular setup, you're going to go test it in the live markets under pressure. Because back testing is all well and good, plenty of people back test and they're all profitable, but apply it to the real life markets. That's where the real pressure is, the real emotions, and quite frankly, what trading is all about. It's all about that pressure, kind of stripping away your emotions, or at least putting them to one side and staying systematic and focusing on carrying your edge to the best of your ability. That's all what trading is about. So now we're going to focus on that particular pattern. So we've done all the hard work, refining that edge, creating that strategy. Now it's all about applying that in the real life markets under pressure, and you want to be doing this for at least 4 to 6 months before you really investigate whether you're on the right path or you're not. Because again, like I said in the previous steps, market conditions will vary. Some months you might do well, some months you might do poorly. You're not going to just throw everything out the window, all the hard work you've done throughout each step, just because you had a poor month, and you're not going to just jump onto large capital just because you had a good month after all the steps you have followed. You want to be at least looking at 4 to 6 months of data of your actually live testing with a small account. Again, small account is underlined important because you're still at a stage where you could blow accounts. I know you've done a lot of work, coming up with a strategy, coming up with your refined kind of setup, but emotions can creep in. We haven't really worked on emotions yet. We've only just discovered the strategy. Emotions could still creep in. Revenge trading, fear of missing out, moving your stop loss placement. That's all to do with just understanding yourself and being disciplined, and having a good psychology to trade the market with. That hasn't really been worked upon yet. So blowing accounts it's still a big possibility there. So make sure the account size is small, something you can afford to lose, or maybe even demo account, but you preferably want to keep it live because now's the time to really step up and move on to, you know, working with real pressure. Demo accounts, there's no real pressure there. Yes, you do have kind of fake capital when you want to do well, but there's no real pressure. If you blow the demo account, you know, there's no love lost. Live account, even doesn't matter how small it is, it will hurt. It will hurt. So the live account is important, and we're going to live test that for at least 4 to 6 months. Then we can reflect on that data and see how well we've done. If we're profitable, you know, getting percentages that we're looking for, you know, 2, 3, 4, 5, you know, 10%, anything between that, you know, consistently. Again, some months might fluctuate, but overall as an average, we're getting some good percentage in the market. Then we can look to go and attain higher capital and really put ourselves to the test. Yes, there'll be more hiccups and bumps in the road. Do not get me wrong. You might have to go visit some steps. But now we're looking to push forward in our journey. If you're not profitable after these 4 to 6 months, and again, you won't be the first one and you definitely won't be the last. Most people trading their first live account or one of their first few live accounts will not be profitable. So this is where you're going to look to pivot and focus on your psychology, because you've done all the hard work. You know you've got a good setup here. You're refined. You've done the hard work. Now it's to work on yourself as the trader and make sure you do have the good psychology and a good self-awareness to actually trade this profitably. So this is where you're going to look at your behaviors, your patterns, you know, identifying emotions when they arise, you know, what triggers those emotions, what to do when those emotions get triggered, and how to kind of non-identify with them. I will create a whole particular video about, you know, diving deep into psychology and noticing some mistakes within yourself in a separate video, so do stay tuned for that. Make sure you subscribe for that. But if you are in the case, which most likely will be after 4 to 6 months, not really seeing the results you're after, but you did see the results in the demo stages and the backtesting stages, then obviously it's the psychology that is to blame, and we'll go and dive deep into that in a future video. But if you are profitable, well done guys. Move on to the next step, looking to attain higher capital and really push yourself in that direction. So guys, that pretty much sums up the video. That sums up the video, how to create your own strategy in the market. You know, coming from a novice, discovering, you know, what strategy, what setup to focus on, back testing it, learning about it, applying it to the markets, you know, looking to pivot if things are not working out, but focusing if they are, you know, refinement, you know, what really works for you, coming up with the great conditions for a particular setup, and then applying it to the real life markets for 4 to 6 months to see, you know, what your results are. So that is pretty much the process of coming up with your own strategy. Make sure you apply this. Again, this is it's a short video, but it covers a big time span in your trading. So make some notes on it, take what you need from it, and then like I said, we'll come up with that future video going deep into psychology. But if you guys have enjoyed the video, please be sure to drop a like, subscribe if you haven't done already, hit the bell so you don't miss any uploads in the future. But guys, thank you so much for watching the video. Catch you all in the next one.